Here you can see how the student made $4,292 within 1 month. He had 7 losing trades, lost for each trade $100 on average, that is $700. And he had 9 winning trades and made $4,992. Within a week, that looks like this one that he made within a week around, he had 4 losing trades, he had 4 winning trades, he lost $400, and the other week he made $2,325 within this week. So that equals $1,925. And we're going to break down everything, like literally like from the step-by-step guide, what he does to trade, and I hope you can use it also for your own trading instantly. What we use at all in the beginning is the first impression. That means if you look at the market here, you can see how there are at the bottom here more candles here and there than up here, right? Because there's just like a cut, like literally there are less candles. Here you can see more candles, and then a lot of candles here, and then even here a lot of candles, right? And this is like weight. You have now 2 stations. You have a station above here, station 1. You have the cut here in the middle, what just has here a really less candles, and then you have station 2 down here. And either the market wants to stay here at station 2, or it wants to go back to station 1. But here's the thing, if you just see that it's so heavy at the bottom and you see it over and over again, makes more sense that the market is going down. We use a procedure, and this is something what is very important. If you feel being wrong in the beginning, this is how trading works. It is not about watching videos about this is how you need to see the market. That's why I'm giving you here a step-by-step guide what you can use for your own trading, and this will improve your trading if you do this for the next 5 trading days. So first of all, there's a tool that is called Lightshot, or like you just make somehow a screenshot. Lightshot is a very, very cool tool for that. I'm just going to show you what Lightshot is. You can see this one here. This is Lightshot. And with Lightshot, you just can take a picture of your screen, and you just save it in a folder on your desktop. And it means when you start trading, you just make a picture of the chart itself. You make it so small as possible, the 1 minute chart, and then you just draw in an arrow. Do you see right now that the market is going up or down? And here's a trick for that. If you are unsure of that, and this is something what works very well, I'm going to show you this one. From this here, you can see here, this is the trading time at the bottom. And the trading time from here to there, this equals like 2 hours. And what is just very important to know is if you're unsure where the market is going at from here to here within this time here, let's just make this one more a bit to the right because of my camera, then just assume if the market did this for the last 2 hours, just assume it does the same. And it would look like this. Just check out what I just did. It looked like this. And if I just attach what the market did the last 2 hours to the right now 2 hours, it means the market will go down. And this day you can see after you're finished trading, take a second picture. Do not make any pictures in the middle. Just make a picture in the beginning. Look at the market for 1 or 2 hours and make the picture in the end. This is how you build a relationship with the market over the next 10, 20, 30 days, even 1 or 2 years even. And you will see really where the market does the bigger moves. And you can see how the market was also going down here. On the practical side, what we do is that even though the trader was assuming that the market is going up, you see here, even though then he found here a trade to adjust $100 and made 500, or in this case, yeah, it was $600 it was, because you can see here how the market is structuring up here higher. He saw that the market is going up, and then he was trading up. And this is something that is called the first impression. First impression counts. Before any war is starting, you have enough information. Actually, before the war is starting, you already know if the war is won or lost. And same is also with trading with our money. And this is something what's very important. Trading is not just about fantasizing about candlesticks and everything. Actually, trading is about managing an own real money account of $2,000, $50,000, $500,000, or even just like there are these evaluations. There are people, they provide money for other people. If you pay like $50 a month, they give you $3,000. And if you make the first $3,000, then they give you $3,000, and then when you make the first 10,000, they give you the first 10,000, something like that, right? So, okay, let's just go back here. So the first impression is just something what is very important. We go to another picture. You see here, this is where the trader is starting to trade. And then you can see here how he's assuming, like he literally has the first impression. He's assuming that the market is going down. Let's just do like this over the screen so you can see it. Or I just put my camera a bit here onto the right. And you can see here how the trader sees here the market is going down here, right? Like he's drawing in an arrow. It's very small, but he was drawing in an arrow that the market is going down, because here in this area is just on the left side a consolidation phase. That means you can see here a lot of candles. You can see up here a lot of candles, right? And if the market presses so much down, and the main question is what is under me and what is above us? Like in this case above us is just like here the station 1 as we had it. Station 2 is here. And then the third one, station 2 is here, and station 3 is down here. Station 3. And if you can see like it's pressing down, it makes more sense to assume that the market is going down. Makes totally sense. But as I just said, this is so heavy. Usually the market will go back multiple times, what is absolutely cool. And what he was drawing in, the trader, was that he assumes the market is going down and it comes back within the 2 hours. So he's concentrating on the move down instead of the move up. Let's just look at the next picture, what happened. And you see here, bam, how the market was going up, right? So the main question is then always like, what was he prioritizing? Was he prioritizing the move down, or was he prioritizing the move up? Where I would actually think it's better for the beginner to say like, hey, to prioritize the move up. Even though when we now pick this one up over this picture tool here, what is pretty cool. Look, if I'm just assuming what the market did in the last 2 hours, it should actually, and I would attach it here, it should look like this, right? That the market will continue to go down. But when we have weight, that means like the candles a lot and it pushes out. Most likely the market wants to come back. Out of 10 days, sometimes it's going to be like 7 days or even 8 trading days. It's really insane, this method to read the market. And you can apply actually any trading strategy with it. It's just insane. Here you see how the market was going up. And it's just very important to be with this one right first. And then you can see here how the traders saw a trade within a small green candle to adjust $100 to make $500. To adjust here $100 within a small color switch to make $500. What I really love is if the market does red and green, and then it does red and green again, but the red and green goes higher in reference, as you see here. And then here you see red and green, red and green, red and green goes lower from here to there, right? It's very small. And then from here, red, green to red, green goes higher, what makes this such a good trade. Now the question is, if red and green is just like an entry signal, do I take every red and green? And no, and this is something what is very important. The first one is with the relationship to the market, what we just talked about. It doesn't need to be every day right, because in trading, it's about money management. Like if we have $1,000, what I really love is divide it into 10 trades. It's not a $1,000 account. That's maybe a $3,000 account or something. Then it's just very important to know, like I'm only allowed to have 2 losing trades a day. I'm only allowed to have maybe 5 losing trades a week. Like to spread the money, it's very important, because there will be days we do the trade and then the market will not do the move at all. It's just insane. And you could make like 5 trades and each of them would be a losing trade. But on another day, if you would make 5 trades, 3 or 4 trades are going to result in profit. That means it would work, and only one of them would not work. So it's literally about those different trading days to spread money around. So you can see here, and this is something that's very important. We don't just have a red and a green candle and say like, I'm just going to enter the trade because I can see it's going up. It's very important to have every 10, every 15 minutes an entry signal in both directions. That means so I can buy and I can sell. And I'm usually trading just the market. That means seeing that the market does retracements. That means that the market goes from top to bottom, from here to there. If you just see like that, from here to there, the market goes down, right? And then from here to there, the market goes down. And it just shows us that once the market starts to structure higher, you can see here it structures down like this. And once it structures to get higher, this is good to enter a trade and then to trade up. But this only works the stronger the pressure is. I had a question like, what about volume and stuff? And I'm telling you, if you see so many green candles that the market will go up, like in this case, just to a reference, like here, the market will push up. It's just amazing to use that. So it's about quantity also of trades. Even though you're the best trader with a 90% strike rate, it means out of 10 trades, 9 are working, whatever. There will be always a time you do the best trade and it's not going to work. So it doesn't matter if you're a beginner or if you're experienced. I think 2 trades are just very important. That means you see here from red, green, for example, red, green goes higher, but this green candle is so long. That's not good, because if you are just here $100, $500 would be up here. That's just insane. And trading futures, it's also not possible. Once the market does a small from here, red, green, and just goes higher with the red, green. This is really cool to enter the trade where the candle is closing. The candle always closes at the top, very tiny, adjusting $100 on the color switch. The stop placement should be always at one of these wicks of the color switch, either here or there. In this case, it's here for the beginner. And then the entry is here in this case. And you see here how he manages here to see a $500 trade. We call this one A1 and A2 because we just analyze, we just read that something is working. Is the market producing right now enough cash flow, we call it. And when we can see that multiple times, then we start trading it. So another trading day, you can see how the trader sees here the market is down here, wants to continue to go up, and then bam, the market was also going up, very good. Now we go inside, and then here you can see based on the trading strategy, the trader saw 1, 2, 3 trades within, I think it was like 30 minutes or something, and then he only took the best trades. And this is something what's very important. You want to have so many entry signals as possible, but only trade when you see that it makes sense and see it makes quality. And here you can see how he made a $500 trade within this one, and he made also a $700 trade. And this is something what's very important also, by the way, is that if you have a small green candle and you see also that there's enough cash flow, that means the market is moving aggressive enough. Check this out. And this is something what is really very, very interesting. And on the practical side, this trade from here to there was $500. The trade from here to there was $700. So you see, this is 50% less of the move than this one. Took 50% also less of time. It's amazing. The reason was because there was just a small green candle, and here you have a very long color switch in the green candle. So the smaller the green candle is, the better the trades they can be when the market is also running good at a day. But sometimes you will not have something perfect because you see that the market is going up, then you have a very long green candle. It's just insane. And then we try just getting, like, we cannot trade always perfect. Sometimes we want also to have this kind of trades. It's totally fine. But if we can see these kind of trades and we just collect 10, 20 of them within the next 2 or 3 months, amazing. It's just game changing. And I'm really talking about like not 10 trades just within like 1 or 2 weeks, 10 trades within 5 weeks, maybe within really small candles, because trading is about money management. It will not work every day. It will not work every week, because there will be days and weeks the market will not do the exact push. And that's why we're just concentrating on the days where you can see like picture number 1, he sees the market is going up. He says like it's going to these highs here. And then picture number 2, you can see now here at this picture here that the market managed to go to the one reference. We're just going one picture back that you can see it again. Picture 1, picture 2, picture 1, picture 2. Oh, it didn't manage to go to any reference. So as you see here, he also found here a trade, but it didn't work out that well. And the main reason the trade didn't work out that well is because he was assuming the market is going up. And it's just like being shocked, because it's just like, I'm assuming the market is going up and I'm just seeing the market is going down. It's just being very clueless what to do. And this is totally normal in trading, and it's also okay, because the money making activity is, and what of these days can I see that the market is going up and then the market is really going up? And here you see again, market is going down. In the last pictures I was preparing here to see like that the trader was here wrong multiple times here and there. And it's just very important that if you assume here that the market is going up, it's, by the way, just the same thing that you see here that the market has here a lot of candles. You see the market has here a lot of candles, but really a lot of candles are up here, what cannot be seen on this picture. And the thing is that it makes sense that the market wants to go up here. I totally understand that. But usually as a beginner, I think it is just very important to more likely see that the market wants to go back to the consolidation phase, that the market was pushing out of where the candles are and was going higher. Last Thursday, the market was at the all-time high of the S&P 500 futures. And you need to imagine that the market will just push up for days. And it does different kind of patterns with red candles and whatever formations you have read maybe in the book or seen in the internet. The market will just aggressively push up very often. But once the market is back down, usually if you have a consolidation phase and the market's just neutral on where it likes to go with its personality, it wants to go mostly up, and then it just goes back to where we have a lot of candles. Hope you could take something out of this video. Try this one with the 10 pictures, literally like with the 2 pictures. You make 1 picture in the beginning, 1 picture in the end. Do not care about how candles look here too much. Look at the structure within 1 hour in front and in 1 hour in back. And I'm telling you, this will improve your trading within 5 or the first 10 trading days. Wish you all love, good trades, JT out.